Starting off, the growing tensions between the United States and the European Union have escalated into a potential trade war, with tariffs on alcoholic beverages taking center stage. The dispute stems from the EU's consideration of increasing tariffs on American whiskey, a move tied to a long-standing disagreement over subsidies to aircraft manufacturers Boeing and Airbus. President Donald Trump responded by threatening a retaliatory tariff of 200% on European wine imports, an industry crucial to several EU economies. These proposed measures have ignited concerns among businesses and trade experts about the potential economic repercussions and strained relationships between the two global trading partners. The core development revolves around the EU's proposed tariff on American whiskey, which has been a symbol of U.S. craftsmanship and a critical export product contributing over $1 billion annually to the U.S. economy. American whiskey exports to the EU fell by nearly 37% over a 3-year period due to existing 25% EU tariffs that were introduced in earlier disputes. On the other hand, Trump's countermeasure, a potential 200% tariff on European wine, would directly affect a market valued at approximately $5 billion annually in imports to the U.S. market. Trump reportedly stated during a press briefing, "If they hit our whiskey, we'll hit their wine twice as hard, maybe thrice." This back-and-forth dynamic depicts the escalating tit-for-tat strategy, hindering any immediate resolution. One significant challenge arises from the impact these tariffs could have on small and medium-sized businesses dependent on wine and whiskey trade. American whiskey producers, already burdened by reduced exports due to previous tariffs, face additional hurdles if retaliatory actions deepen the conflict. Similarly, European wine exporters, many of whom represent family-owned vineyards, fear losing access to the substantial U.S. market. Industry experts argue that prolonged tariffs could lead to job losses and higher prices for consumers on both sides. To prevent this economic fallout, trade representatives have suggested revisiting past negotiations and seeking a comprehensive agreement that addresses broader subsidy-related grievances. If enacted, the proposed tariffs could have extensive ramifications on international trade, consumer markets, and diplomatic relations. U.S. consumers may face a drastic increase in the price of European wines, with some estimates predicting retail wine prices could double or triple for certain brands. Similarly, American whiskey producers could see further reductions in their export volumes, exacerbating existing financial strains on the industry. Beyond the economic aspects, the continuation of this tariff war risks souring the transatlantic relationship traditionally marked by strong alliances. Restoring balance requires both nations to reassess their trade strategies and prioritize resolution over escalation, preserving the essential trade ties that benefit industries, workers, and consumers alike.